Hey everybody, Sunship. We're getting a sell-off in the market today. It's a very interesting sell-off because a number of reasons. One is usually before a Fed meeting, not much happens. And we have the Fed FOMC tomorrow. Usually nothing happens. Usually you don't get this kind of selling or buying right before a Fed meeting. Usually it's just stagnant, right? So we're getting selling, which is really interesting. We're also below a strong support at 41.25. That's also where the daily 18MA is. We're below the daily 18MA, which is at 41.26. That's interesting. Just yesterday, we hit the upper Bollinger Band. Okay, and we had that, what was that called, that candle? Shooting star. I couldn't remember it. Anyway, we had a shooting star candle yesterday. We are now under the 18MA. That's interesting. Psychologically, I could see people get excited because this level got taken out yesterday. This high of yesterday got taken out, right? Once this high got taken out, I bet a few people were thinking, we're going to keep pushing up. Well, all we did was double top with the previous top right now. That's all we did. The other thing that's psychologically interesting is large traders know that most people don't want to go short into a Fed meeting, especially one where they may pause, right? Pause their rate hikes, which a lot of people think they're going to pause their rate hikes. They might do 25 basis points tomorrow, but they might pause. A lot of people are expecting some kind of pause or at least language about a pause. And you would think, well, that's bullish. But what if you have large traders saying, you know what? You're not going to have a lot of shorts in the market, so it's a great time to sell, while there's no shorts happening in the market, where it's very little. Let's look at the PCC, the put call. Now it's going up now, but you can see the put call on equities and indexes has been stagnant. It hasn't been moving up. Put call on SPY is near the lows. This has all been going up since this morning. Put call on the SPX index is still quite low. These are this is usually where it gets stopped, which is at 5 or 6 on the put call ratio. Well, we're down at 2.7 right now. We get plenty of room to go if this wants to go higher. Put call on Apple is near its lows. Okay, Apple's coming up soon. So it's an interesting sell-off because I think it might be sort of a sneak attack by sellers saying, you know what? There's not that many shorts in the market. It's a good time to get out and sell the news that the Fed is going to pause. Maybe some people know, well, it's probably going to be a pause. Let's sell the news. Okay, when I look at NDX, this is the NASDAQ index. We've been in this channel. We got to the top of it. We're selling off. You can see triple daily bearish divergence on this chart. RSI has plenty of room to drop here. Plenty of room to drop. This is looking like one huge sort of bearish channel. And the interesting thing about NDX is we had a head and shoulders from, the top. Well, we never hit that target. We never got to the target of the head and shoulders, which is down by 9,500 to 9,000. Okay, this doesn't look bullish to me. This looks like sort of a rising wedge type thing. It doesn't look bullish, and especially with this daily bearish divergence. So it's interesting. Maybe people were thinking, I'm going to short after the FOMC. I'm going to short after Apple. I'm going to short, when I see a downtrend finally. And it could be that sellers are coming in early before the Fed to throw the market off guard. Because, everybody nowadays, everybody knows the strategies. Everybody knows that well, before the Fed meeting, you got to lighten up. Everybody knows that now. Everybody knows that 4,200 is the obvious area. Everybody knows that, right? Like I was saying, hey, 4,200 is the obvious area. Why? Because, well, weekly Bollinger Band, 100 MA, and you have a daily gap, which has still not been filled. Oh, sorry, that's on SPX. A daily gap, which has still not been filled right here. So, you know, there's two ways to think about it, which is, you have large sellers say, wait till they get to the gap and sell it. Or, you know what? If everybody thinks the gap's going to get filled and everybody thinks the FOMC is going to be bullish, sell it early. All right, I got alarms getting hit. AI is getting hit. Okay, so that's getting clobbered. Anyway, that's the update. Take it for what it's worth. There's going to be a bounce for sure because this RSI is on the hourly is already pretty low, so you're going to get a bounce. But watch that daily 18 MA on SPX cash. It's 41.26. Watch that. If we bounce to it, I think it's a short. On SPY, it's 41.44, or excuse me, 411.43. And yeah, that's all I've got to say about this today. It's very, very interesting. Very interesting day. I bet a lot of people are surprised by this. I know I am. I have been short. I'm staying short. I'm sitting in my hands. But I figured it would go higher. I honestly thought, okay, a sell-off and then higher. It might be a sell-off and just a minimal bounce. All right, that's it, everybody. Good luck.